RBA just paused after 3 consecutive rate rises. A lot of people heard that news and thought, relief. But here is what's actually going on. The average Australian on a variable home loan is currently paying an interest rate of 6.84%. The lowest rate available in the market today is 5.35%. That's a gap of almost 1.5 percentage points. On the average Australian home loan, that gap costs more than $700 a month. Your lender isn't going to call you about it. By the end of this video, you'll know exactly what to do. I'm going to walk you through 5 moves, each one specific, each one available to any Australian with a home loan. And by the end, you'll know which ones apply to your situation and where to start. This video isn't about predicting where rates go next. The big banks are genuinely split on that right now, and I'm not going to pretend I have an edge over their economists. What I can tell you is what the numbers already say about your current mortgage and what you can do about it today. Here is the one thing to hold on to before we start. There's one move on this list that almost every mortgage holder skips because they assume it won't work. It almost always does. I'll come back to that one, tell you exactly what to say, and explain why it works more often than people expect. But first, let me show you how we got here, because the last 18 months tell the whole story. This time last year, the mood around mortgages was very different. After a brutal run of rate rises that began in 2022, the RBA spent most of 2025 giving some of that back. 3 cuts through the year brought the cash rate down to 3.6%. For mortgage holders, that was real, something like $250 a month back in the budget on a $600,000 loan. A lot of people started breathing again. Then 2026 arrived. Inflation came back, partly driven by fuel prices, partly by global uncertainty. And the RBA reversed everything it had just done. February, March, May. 3 consecutive hikes of 25 basis points each. The cash rate climbed back up to 4.35%, the highest it's been since 2011. What those 3 hikes cost the average Australian borrower is $344 a month, $4,128 a year. Almost all of the relief from 2025's cuts taken back. And then in June, the pause. What comes next is genuinely uncertain, and anyone telling you otherwise is guessing. CBA and NAB believe the current rate is the peak and expect cuts sometime in 2027. Westpac disagrees. Their economists are forecasting 2 more hikes before the end of this year. Bond markets have started leaning toward cuts. Governor Bullock is keeping the door open to further increases. If there's one wildcard that could shift this faster than anyone expects, it's oil prices, tied directly to what's happening in the Middle East. And those have been one of the main drivers of inflation this year. Here is what matters for you, though. While everyone debates what the RBA does next, the bigger opportunity for most mortgage holders is already sitting there. And it has nothing to do with the next decision. Here is why. The cash rate is only one part of your home loan rate. The other part is the margin your lender charges on top. That margin varies between different lenders and sometimes between different customers at the same bank. Around 40 lenders in Australia are currently offering variable rates below 6%. The average existing borrower is sitting on 6.84. If you've been with your bank for a few years and never asked for a better rate, the gap between you and the best available rate in the market is probably worth more per month than anything the RBA has moved this year. That's the gap this video is going to help you close. Here is how. Move 1 starts right now, before anything else. Log into your banking app, find your home loan, and write down your interest rate. The actual rate, not the comparison rate, not a guess. If you can't tell me your rate off the top of your head, that's completely normal. Most Australians can't. But in this environment, it's an expensive thing not to know. Move 2, the gap test. Compare your rate to what the market is currently offering for a loan your size. CanStar and Finder both update their comparison tables daily. The question is simple. Is your rate more than 0.5 percentage point above the lowest available rate for a loan like yours? For most borrowers who haven't renegotiated in the last couple of years, the answer is yes. And that tells you there's real room to move. Move 3, call your lender before you do anything else. This is the move I mentioned at the start, the one most people skip. Here is exactly what to say. Call the home loans team, not the general bank line, and tell them you've been reviewing your mortgage and that your current rate is higher than what other lenders are advertising. Ask if they can offer you a better deal to keep your business. That's it. No threats, no ultimatums. Just a clear, calm question. A rate reduction of anywhere from 0.2 to 0.5% isn't an unusual outcome from this call. On a $500,000 loan, a reduction of just 0.25% saves you over $1,200 a year. The reason this works more often than most people expect is simple. It costs your bank far more to acquire a new customer than it does to reduce your rate by a fraction to keep you. You have more leverage than you think. And if you've already got a mortgage broker you trust, bring this conversation to them. They know your file, they have access to rates across multiple lenders, and they can do the negotiation or the comparison on your behalf. Move 4. If your lender won't move, refinancing is your next option. The savings can be larger, but it involves more paperwork and some upfront costs. Average refinancing costs in Australia sit between $1,000 and $3,000 once you factor in discharge fees, application fees, and valuation costs. At a saving of several $100s a month from moving to a lower rate, those costs can typically pay for themselves within 6 months. Before you start the process, check 3 things. Whether you're still inside a fixed rate period, because break costs can be substantial, your current loan-to-value ratio, which determines what rates you qualify for, and any exit fees on your current loan. A mortgage broker can help you run these numbers, and in Australia, they're generally free to you because lenders pay them directly. Move 5. Fixed versus variable. And this is where the uncertainty about the RBA actually matters for a practical decision. Something interesting is already happening in the market. Even while the cash rate has been on hold, some lenders have started cutting their 2- and 3-year fixed rates. Banks tend to do this when they believe rate cuts are coming. They're essentially pricing in the future. A 2-year fixed rate of around 5.99% is currently available from some lenders. If you believe rates will go higher before they come down, locking in now gives you a ceiling on your repayments. If you believe the RBA is done, where CBA and NAB currently sit, staying variable means any future cuts flow to you automatically. Here is the framework. Can you comfortably absorb another 0.5 percentage point increase from here? If yes, variable keeps your options open. If that scenario would genuinely stretch your budget, fixing at least a portion of your loan buys you real peace of mind. Here is the quick summary. 3 rate hikes this year added more than $340 a month to the average Australian mortgage repayment, wiping out almost all of last year's relief. The pause gives you a window, but no one knows how long it holds. The biggest lever for most borrowers right now isn't whatever the RBA does next. It's the gap between what their lender is currently charging and what the market offers. Closing that gap doesn't require a recession to end or a rate cut or a policy shift from Canberra. It requires knowing your number, and in most cases, 1 phone call. Tonight, 3 things. 1. Log into your banking app and write down your exact interest rate. 2. Go to CanStar or Finder and check the current best variable rates for your loan size. Calculate your gap. 3. If that gap is more than 0.5 percentage point, call your lender this week and ask for a better deal. Or bring those numbers to your mortgage broker and ask them to do it. No new loan required, just your rate and 1 conversation. As always, this is general information and not personal financial advice. Your situation is your own, and for anything like refinancing or a fixed versus variable decision, a conversation with a mortgage broker is genuinely worthwhile. Just before you go, I want to remind you that the end of financial year is only 9 days away. If you haven't done anything, don't panic. I have made a video about 7 key things that you can do to save big on your taxes without needing an accountant. Link is in the description. One last thing, if some of this felt unfamiliar, if you haven't really thought about your mortgage rate before, or interest rates have just been background noise, that's a completely fine place to be. None of this gets taught to us. I've made one video that covers the whole financial picture for Australians, from the ground up, across 7 chapters. It's a longer watch, but it's the one I'd point you to if you want to understand how money actually works in this country, before anything else. The video is right here. I'll see you over there.